Welcome to episode 30 of Cleared for Takeoff. This is the finale of the series, and I want to use this episode to do three things: synthesize what we've covered, make the clearest possible case for why the timing of this opportunity matters, and then extend a direct invitation to the serious investors in the audience to continue the conversation beyond what a podcast can provide. Let's start with what we know. Over the past 29 episodes, we built a comprehensive, data-driven picture of the corporate aviation infrastructure market. We know that the U.S. business jet fleet exceeds 14,200 aircraft and that 8,700 more are projected for delivery over the next decade, worth $277 billion. We know that the global business jet market is growing at nearly 9% annually and will more than double in size by 2034. We know that business jet utilization is up 14 to 22% since 2020, driven by a permanent structural expansion of the private aviation user base. The demand is real, the demand is large, and the demand is durable. We also know that the supply side is broken in ways that cannot be quickly fixed. Nearly half of existing U.S. hangar inventory is functionally obsolete for the modern large cabin fleet. A new Class A hangar development takes 3 to 5 years from concept to completion, moving through regulatory processes that cannot be accelerated by capital alone. Airport land is genuinely fixed. No new acres can be added to an established airport's footprint without multi-year federal approvals. Hangar fees are rising 11 to 19% annually in supply-constrained markets, reflecting a pricing power dynamic that has no parallel in conventional commercial real estate. The supply constraint is real, it is structural, and is getting more acute with every passing quarter. In Dallas-Fort Worth, the leading corporate aviation market in the American interior, anchored by a $78.3 billion annual economic impact and a relentless wave of corporate headquarters relocations, hangar waitlists run 12 to 24 months, and the competitive landscape is dramatically underbuilt relative to demand. In Orlando, where defense, tourism, technology, and healthcare generates a diversified and non-correlated corporate aviation demand profile, new Class A development opportunities exist at secondary airports serving a market that business jet traveler has characterized as being at premium capacity. These two markets, paired as a dual market investment strategy, offer geographic diversification, economic sector diversification, and a complementary investment types: acquisition and optimization in DFW, development intensive in Orlando. The institutional validation of this thesis is unambiguous. Apollo, Bain Capital, KKR, Global Infrastructure Partners, Carlyle, Ares, the world's most sophisticated alternative asset managers have entered this space and are actively building positions. Their presence is not competition for what we're doing, it is the exit for what we're doing. When Pentagonal Aviation Infrastructure has assembled a well-positioned, operationally excellent, vertically integrated platform in DFW and Orlando, the buyers are already identified and already active. That exit visibility is unusually clear for an emerging asset class at this stage of its institutional adoption. Now for the timing argument. I've mentioned throughout this series that the window for emerging manager positioning at attractive entry valuations is real but not permanent. Let me be specific about what I mean. Right now, the sellers in the middle market regional FBO and hangar space are primarily family-owned or regionally focused operators who have not optimized their assets for institutional sale. They're not running competitive auction processes. They're not running their businesses at institutional standards of operational excellence. They don't have institutional quality financial reporting. All of that means that the entry valuation reflects the seller's perspective and the current operator's capability, not that the value that an institutional quality operator with access to capital could generate from the same assets. That gap between current value and potential value is where the returns are made, and that gap exists today at real airports, in real markets, with real assets available for acquisition and development. Every quarter that passes, the awareness of this opportunity grows. Every Bain Capital and Apollo transaction in the space signals to every family office and institutional LP that this is a real and viable market. Every new Class A hangar that opens in DFW or Orlando gets absorbed immediately, confirming the demand story. And every quarter, the pool of below institutional quality assets available at below institutional valuation prices gets a little smaller. The window is open, it is meaningful, but it is not permanent. Here's where I want to close. The podcast has been an attempt to share, as clearly and honestly as possible, the full picture of the aviation infrastructure investment opportunity. The demand, the supply constraints, the regulatory moats, the specific markets, the financial mechanics, the risk, the exit thesis, the investor fit. We haven't oversimplified, and we haven't hidden the challenges. We tried to give you the complete picture and trust you to draw your own conclusions. If your conclusion is that this thesis deserves a serious look, we'd welcome the next conversation. What a podcast can do, and I think we've done it as thoroughly as the format allows, is establish the thesis and build the context. What it cannot do is replace the actual diligence process. Reviewing the formal offering documents, meeting the management team, touring the target markets, stress testing the financial models, and making the kind of informed, considered decision that serious capital allocation requires. That next step is available to accredited investors who are genuinely interested in evaluating Pentagonal Aviation Infrastructure as part of their alternatives allocation. The runway is long, the demand is structural, the supply is constrained, the barriers are durable. The institutional buyers are waiting, and Pentagonal Aviation Infrastructure is building the platform to serve all of it. We're cleared for takeoff. I hope you'll come along for the flight. Thank you for listening to all 30 episodes. For accredited investors interested in learning more, please contact Pentagonal Aviation Infrastructure directly. Everything discussed in this series is for informational purposes only and does not constitute an offer or solicitation to invest. All investments involve risk, including loss of capital. Please consult your own legal and financial advisors before making any investment decision. Until next time, cleared for takeoff.